Hey there, welcome to First Glance with Jody Vance. Excited about this next subject because I don't know if you're a sports fan, you know I'm a sports fan, longtime sports broadcaster. So my eye is keenly tuned to the way sports are rolling out. And it's hard to miss the fact that sports betting is a huge part of the advertising structure around professional sports right now, and for good reason, um, because it's fun for so many people. Know your limit, play within it. I like to say that whenever we're talking about betting and such. Fans Unite is our subject matter for this edition of First Glance with Jody Vance. Very glad to have Scott Burton, the CEO of FansUnite, with us. Nice to speak with you, Scott. How are you?
Yeah, well, thanks. Thanks for having us back.
It's good to talk to you because the last time we spoke, we were talking a lot about McBookie, and we were talking a lot about where Fans Unite was in this lane, if you will, and it was busting out, growing huge when we last spoke. And yet here we are now, where you can basically not move without seeing an ad, hearing an ad, or even your digital online, everything. It just seems like a much busier lane. Good on you for grabbing the ticker symbol. I think I told you this the last time we spoke. FANS. I don't think it gets better for fans than to just look up fans on the TSX. Give us a little bit, for those who maybe didn't see the last time we spoke, the 411 about Fans Unite.
Yeah, it's quite a different story, I guess, since the last 2 weeks. I've had a few pretty major announcements of the business. So, Fans got public in March of 2020, did an acquisition of a direct-to-consumer sportsbook called McBookie. In August of 2020, we merged in a company that I started, which was in the technology side of sports betting and casino, so building up the
Yeah.
technology. And then in November of 2021, we did a major acquisition in the affiliate space. So the groups that drive players to online sports books and casinos. 2021, especially in the markets, was a pretty crazy time. So, stocks were going up very quickly. Gaming stocks were doing the same. And then we've hit a sort of a different world in terms of the economy, the markets, and everyone, everyone's looking at things a bit differently. So we started to focus in on the pieces of our business that we could simplify, streamline costs, and just build out a cash flowing business. And so what we've done recently is we decided to leave the direct to consumer space, which is operating our own sites. Big regulatory burden. A lot of the growth is in the US, and that's really playing out for the big players.
Yeah.
We did have success with McBookie, so year-on-year growth was good. It was always a profitable business. So it wasn't something we necessarily had to do, but we got an approach for a very attractive price and multiple on that business. So especially off the back of, the best year McBookie had ever had in their history, off a World Cup year, which helps boost numbers, but also heading into a pretty choppy UK market. So the UK is really pushing back on what you're seeing here is a lot of those ads and advertising and player protections. So it was going to take a lot more work in that space. And again, we wanted to
Right.
focus on other parts. So we sold McBookie. So we got completely out of the direct to consumer space, which left us with our affiliate business and the platform side. On the platform side, that was our highest cost center. So it was very heavy on development. We spent a lot on development to get the platform to where it was, the commercialization. We started to commercialize it. And then we had another approach about acquiring a piece of that. So we effectively worked the code of our platform. So we made copy, and Better Holdings, who was one of our customers, acquired that from us. So we've cut out a significant amount of costs on the development front, which now puts us on the path to being profitable, cash flow positive this year, really off the back of our affiliate business that we acquired. So that if people looked at the growth in revenue, we went from, I believe it was about 5.6 million in 2021 revenue to about 27.3 million the next year. That was,
Wow.
yeah, it was a big jump, but it was largely off the back of the affiliate business,
Right.
which is a profitable business. Affiliate business is nice, it's high margin, and we're in the US space specifically, and you're going to see a lot more growth there in the US. So we decided that's the piece that we needed to make sure we put the right resources towards to grow it, to keep boosting margins, which we've done. And that will continue to be a profitable business with a lot of good growth prospects. So as we stand now, from where we were, even 6 months ago, we were very much pushing on the affiliate space in the US, and then we still retain the rights and use the code that we've developed. So we still have the ability to monetize that code. We're still supporting a B2B client in the UK, but we can then sell it again. So the top line sale price on the first code sale was 10 million Canadian. So we still have the code to use or sell again.
So this is super fascinating because I remember when you and I spoke when things were just starting to grow, as you were telling that story with the McBookie piece, and we talked a lot about the UK, and so much has evolved and changed. It feels to me that you and FansUnite was very much on the leading edge of the wave, if you will, on what was about to become huge. And now, if I'm getting your story correctly, those pieces that were really working, the big guys, people, guys, gals, those big players were coming for what was working. A good signal. But what does it evolve into in layman's terms? If you wouldn't mind sort of setting up, if an investor is coming to FansUnite now, what are they investing in? Like I said, in lay terms.
Yeah, I mean, at this point, the affiliate piece of the business is what people I think should really focus in on, and how we're unique in that space, and actually a leading player in the space. So, we were, I would say, effectively more of a startup company in the other spaces for the last couple of years.
Right.
And now we are a dominant player in some of the stuff that we're doing in the affiliate world. So just for people, again, affiliate business is we get paid to deliver users to FanDuel, DraftKings, MGM, Caesars. The big part of our affiliate business is not what people think. I think most of them think digital. So you go onto a website and you see free bet offers or ads to go to one of those sites. Our largest piece of that business is a live activation group. So we have people on the ground, up to 400 betting heroes throughout the US. We're in, I think, 15 states at the moment. We have contracts with those large players, and we will be on property in a casino, and we will be helping people download the apps, get through all the friction points, which is, the KYC, which is age, identity, location verification,
Mm-hmm.
and then depositing. Because if you're a digital affiliate, less than 50% of people who click an ad are going to actually get to deposit, because there's so many points in the journey where they just fall
Right.
off.
Right.
With
Where
the
they could
live,
be like, I
yeah,
don't know. Yeah. Yeah. No,
yeah,
good explainer. Really good explainer.
yeah.
We are, if you're just sort of now leaning in on your first glance with Jody Vance here with Scott Burton. He's the CEO of FansUnite. We're talking about what this business has evolved into. And you really did give some meat on the bone there in terms of what people might be investing in here, having boots on the ground, having people engaged and involved, as opposed to just clicking, checking it out and moving on, where some might be able to just exist being a logo that flashes by, or a talking point, if you will. It sounds like FansUnite is committed to that user friendly support piece of this, if I'm hearing you correctly. How big is the online gaming market in North America right now?
Oh, it's many, many billions. I mean, if you look at what I think they're projecting or talking about in Ontario, it's, I'd say anywhere, people are saying anywhere 5 to 8 billion, and that's one province. You look at that province, and it's probably, if you match it to the US, it'd be one of the top 5 states in terms of population size. And so then if you just multiply that out by the US, and going live in every state, it's tens of billions of dollars. And that's just North America. So, and
Right.
that's really where we're focused, because we're in a real unique time in North America, with the US really only starting to legalize online sports betting in 2018. So you now have a massive country with a big population that's introducing regulated sports betting.
Right.
We're probably not going to see that again anytime soon in a country of that size that's opening up. And so we have a lot of growth ahead. And that's why we love the affiliate piece. And we're really one of the only that's US centric. So we're based in the US. Anybody else in the affiliate world started in Europe and is trying to come into the US, but we're completely focused on the US. So it's higher cost per acquisition, which means we get paid more for a US customer by US operators at the moment than you would in Europe. But you have so many new markets to come. You look at what's still to come in the US, and you have California, Texas, Florida, three big states that have not yet legalized sports betting, but they're going to.
Right.
So every time one of those opens up, our affiliate people are there day one, and we're generating new revenue.
Yeah.
There's another piece that's coming down the road, I think, too, in a lot of states that's not there yet. That once they do sports betting, they're going to come back around and figure out online casinos. So that will be the next thing to get regulated. And when that does, that market's even bigger than the sports betting market, and we get paid higher acquisition on a casino player than we would on a sports bettor. So we're already in all those states. We already have arrangements with all the operators. We can just now be activating a whole new user base on the casino operations as opposed to the sports book. So lots of growth ahead for that affiliate business in the US. And we have some other pieces that we're building out on top of the live activation right now.
Right. So all of that sounds like opportunity. Within that, we've seen, as you pointed out, in the UK with some restrictions coming in, some regulatory pieces, some tweaking, if you will, to how the space has been regulated. There's been some pushback and some chatter about that in Canada, perhaps less or so in the United States, where places like Vegas have been celebrated, and where casinos have blossomed and grown in such a way that it's just kind of a no-brainer that it would go into the sports lane, it would go into the online lane as well. How do you prepare yourself for the uncertainty around how those regulations might ebb and flow depending on the politics around, well, any country that you might be working in particular the United States?
Yeah, another reason why we like the affiliate business, it's quite a bit easier as an affiliate to adjust to those things than as opposed to an operator. So if you're an operator spending hundreds of thousands or millions on your licensing to get into a state or province, and then regulations change on you, it's quite difficult. And we've seen that being an operator. But on the affiliate side, we really have to pay attention to the advertising rules. It mostly comes for us around incentivization. So there's states or provinces that either do or don't allow it. So you'll see in a Vegas where you can't incentivize. So you can't say deposit 50 and we'll give you 50, or sign up and we'll give you a free bet. All of the information has to be around about the product and why the features and benefits of the product. So as an affiliate, it's a little easier to navigate when things change or that. But and again, it's why we pushing more towards that, because when a state opens up, we can be there day one, as
Yeah.
opposed to an operator who may or may not even get a license. So you could have
Right.
states open up and say we're only giving out 10 licenses. We don't care as an affiliate. We just want it to be open and to have a few competitors, because we can provide users to every one of those operators. And it's still the spend that the operators do. So, we've seen pullback from big operators again, like Caesars, and that they're saying they're spending less on customer acquisition, but that could be on celebrity endorsements or billboards. The
Yeah.
affiliate piece is usually always there. That's the last spend they ever cut, because we are performance based. So we only get paid if we give them a user. And so
Right.
it's very consistent, as even as you see overall marketing spend come down, the affiliate piece is always there.
Right. You still need, you're the equivalent of the call center for the business, to the helpline, if you will, to make those transactions, make those moves happen. Scott, always fascinated to have a conversation with you. Keep us posted. Again, fans is your TSX stock ticker symbol. I love it. FANS. It doesn't get easier than that. FansUnite is the company. Scott Burton, the CEO. What's your website?
FansUnite.com.
Simple as that. Thanks for this, Scott. Good luck. We'll talk soon.
Thanks, Jody.